Buongiorno, buongiorno. Good morning. All right, so what is going on hither? We don't have a president. Hooray! Good. Honestly, I think that's the best solution, right? Just don't have a president. put put Trump in a bunker, put Biden on the side somewhere over there, and that's it. You know, we found a solution to all our problems. All right, moonshot, straight up, 10% move in one day. In one shot. Look at that. 10.5% right up against resistance. And very nicely, I mean, there's some, uh, what do you call it, volume that tapers off up here. Clearly, you can see that here, right? From the point of control, it starts to uh, weaken. And we talked about that. Where was it? Let me see if I can find it. There was a void somewhere. I think it's filling in now, but there was a void somewhere where it was right above us. And that's cool. All right, so the other void is down here, right? Right below the point of control. So there's a void down here. Good morning, Alessandro. ¿Cómo está? So market's up now. S&P 2.1 and Nasdaq 2.25 and small caps 2.3, transportation's 2%. The FANG's up 2.85, VIX down to 27. 750,000 more. Yes, exactly. You know, 750,000 jobless, and it's skyrocketing. It's fucking amazing, right? It just shows you what a disconnect there is from reality. Uh, so think about it. You know, think about the moves, and I think what we have seen with China trade wars, we're coming with an agreement in phase one and phase five and whatever. Uh, uh, all of these things seem to have a theme, and so long as that theme exists, it doesn't matter. It goes into particle mode. It's kind of weird to observe it because I haven't seen that before. Uh, yeah, especially when you're short. Yeah, of course. Yeah, but you got to be really careful when you shorten these. This is what I'm talking about. Be very careful in these events. Very, very, very careful. Because if you don't stop out as soon as it makes that new high, you're, I told you, 2 days ago, I think it was, that I used to blow out accounts like this. You can pick your poison, right, as to what you want to short or go long. But if it doesn't go your way and it goes right above it or right below it, got to get out immediately. You can't even think about it twice. I used to hold on to these things, and then I used to double down. And then once that account will blow out, you're done. You're finished, right? So you don't want to do that. Not when there is so much news-driven bullshit. Um, and again, this is a moonshot. This just like this one here, and we'll get to the analysis here in a moment. Just like this one here, right? It corrected. The same thing is going to happen here. That you're going to get the move that's going to go straight up, right? And then that's going to correct. Okay. But price is an advertising mechanism, and it's trying to provoke emotions, one way or another. It's trying to provoke an emotion. One guy thought the market was going up because Trump was winning. Now it's going up because Biden is winning. The reality is both are wrong. They're just happy that, they're going to get a stimulus. It had nothing to do with it. This correction was based on what? Fear of what? Who's going to win? No. Right? The economic data is garbage. 750,000 jobs. So way above the norm. And that's the problem going forward. That's the problem with perma bears. They're like, oh yes, and we picked from the bottom, we did this, and from the bottom we did. It's fascinating because again, I'm going to say it. 1 second. Oh, come on. See, perma bears is another key word for people who don't know what they're fucking talking about. They just go one way because that's what the chart is doing, and then they embrace it and they say, yes, I did this, and I. But if you see their portfolio, it looks nothing like that. So, as soon as the market tanks, oops, let me go over. All right, soon as the market tanks, and they don't even see it. Oh, my nose. Right? Once the market tanks and they don't see it, they're kind of like, well, it's kind of going down. And then immediately they start talking about this. They jump from here to here, and they do whatever they were saying back here, they're saying here. And there's a recovery, and the data is getting better, and this is getting this, and that's how they deal with it. They'll tell you all in here, yeah, I have this 6-point model, I have this crystal ball, and I have this, and I have. They'll completely just kind of skip over this and start talking about this. No, no, no. That's not the way it works. It's because they don't know what they're talking about. They're unaware of what is really going on. They don't know how to deal with it, right? And if there's anything I've learned from this experience is, and especially now with Trump, is that people literally want to be lied to. So you got to pick a side. You got to pick a side. Do you want to be a progressive? Do you want to be a Trumpot? Do you want to be a libertarian? Do you want to be a gold bug? Do you want to be a peak oiler? You got to pick a side. And then you got to stick to that side no matter what happens. Okay? Why? Because there's continuity in that. There's consistency in that. And people love that. They don't want to know the truth. The truth confuses them. The truth bothers them because it makes them second guess what they believed in the first place. So how many people do you have in the middle who are just like, okay, well, anything is possible. Okay, let's see what's going on. Let the data tell me what's going on. Those people, they hardly exist. Honestly, they do. They don't want to hear anything else. They just want to believe in what they believe. It's much simpler. It's much easier. They don't have to think. And they'll just, yeah, we need a Green New Deal. Yeah, the world's coming to an end. Yeah, we need $6 trillion. Not realizing the quality of the words what they're saying. They don't quantify their words. Oh yeah, well, we need a green. Okay, well, you can't spend $6 trillion a year to infinity. You can't do that. So even if you want a Green New Deal, you can't do that. You'll destroy the economy. Yeah, but we need a Green New Deal. It's like, fuck me. So yeah, it's fascinating. Absolutely fascinating. Um, to me, it just it's absurd. It's absolutely absurd. Go look at Schiff after 10 years. He's still saying the same shit. Nothing has changed. He's just, yeah, something bad will happen eventually. Okay, great. Imagine if that guy had the ability to flip and say, look, things are getting better, whatever, blah, blah, blah. For the past 10 years, what kind of a following he would have? None. None. And if he did, and they say that uh, the gold bugs gave up on him and then he acquired a new crowd of everything is always great and bullish and, bye, bye, bye. Well, guess what? If you start saying that, things are bad this time because we're not just printing for the banks, we're fucking queuing everything, he would lose everybody there again. And that's the way that works. All right. So we get under these themes for whatever reason, and those themes keep running, and they go into particle markets, and you get those algorithms going. And then every single time there's an update on one of the states, it goes up. No matter what it is, doesn't matter what it is. It could be Biden winning, it could be Trump winning. It goes up, it goes up, it goes up. And it's like, okay. So you end up with a 10% move uh, based on no president, based on no policy, based on nothing, right? Just a moonshot straight up. And then we'll get the correction after that, right? All right, so let's get started. We'll start with the eco-weighted S&P right up against the previous high. Let me take this off because I think we need to be a little bit more precise. And there's the resistance right up in there. So this obviously is no longer valid. Breaks bottom, breaks the top, okay, whatever. So now we end up with a kind of right there, okay? So what is that? So that's 1, 2, 3. No, hold on, let me get my thing. So you end up with a 1, 2, 3, okay, defined structure. This is obviously moving to the upside. This is the structure, all right, which is a continuation of this. Oh, come on. Okay, so you got this, all right. So let's look at the SDY up to 0.43%. Okay, nice little void. Remember this one? We were saying, look, this didn't actually come to the bottom. We got to move up. VIX all the way down, straight down, tanked right to that resistance area, and it's bouncing for now. For now. New York Stock Exchange up against this resistance area. So see how everything is going to that resistance so far, right? Pay attention to it. That's a potential area of reversal, right? Doesn't mean it can't go higher. It's not what it means. But what I'm saying is when you start seeing everything come up against resistance areas, uh, index after index after index, then you want to pay attention to that. Dow Jones has a little bit more to go, right? A little more to go to the upside. Uh, Take a look at S&P. Went slightly through it and then right back down. Okay, and again, vertical. Is this the way markets move? No, of course not. So pay attention to it. Where is it at? Against resistance. Same thing. Nasdaq up against resistance. Right? Moonshot. Small caps. Straight down, straight back up, straight down, and now breaks the previous high. Okay. There we go. So bouncing off of that. Again, multiple resistance areas. Transportations pushing back up. Let's make this right in there. And the other two, I think that is a hook, no? All right, so then we have a pause. We have a pause, closing wedgie looking thing. And there's the big push up from the fangs, right? That's the push up right there. All right, so the next one is up here. Okay, let me take all of these things off now. And that's the thing here, right? What's it trying to do? Go lower. How good of a job is it doing? Not very. And that's how you query when you look at these structures. All right. So you have a nice particle market up, comes down, pushes up, double top. I'm sorry, M pattern, lower high, comes back, pushes up. So now you have a 1, 2, 3 pennant wedgie breaks out. All right. Now the thing with wedges, they have this tendency to break one way and then do the other. So be really careful with that. Doesn't always happen, but they're not as clear. World Stock Market Index right up against resistance. Okay, so you see how many things are up against resistance. Multiple, multiple. That's the message of the market. So then you can see again. This is ex-US, so it's the World Stock Market Index ex the US, minus the US. And that's the same thing again there. We'll just put that there. Right, so we'll see how this pans out. Can't see it very good. There we go. Airlines. Airlines. Let me fix that. Right up against resistance. Breaking out on my little indicator here. from this bear flag. China, new all-time highs. Boom, to the moon. China fangs, right, which are the leading indicator. Boom, straight out. This is the first one to break out, by the way, for the airlines. I mean, for China. Uh, Emerging markets, okay, same thing. This EEM. See, the problem with emerging markets is they're mostly China. They're very heavily weighted China. So you expect them to more or less do the same. Japan breaking out. Remember we said we had to make a decision, made a decision, then didn't go any lower, and then now this is the structure, right? It's clearly a breakout. Australia pushing higher. Nifty 50, right? Remember we were talking about this, that it was just waiting while everything else came down to support areas or somewhere like that. Cosby, very nice, straight up. Europe, straight up. Germany, straight up. This is huge, huh? Because this, one second, where is it? Because look at that. Head and Shoulders broke, completed the pattern. Let me show it to you. Maybe you can't see it. So you have the Head and Shoulders, broke, came down, right back up. Where? To that resistance area. Okay. UK broke the bottom, boom, took off. So we put this here yesterday that if it breaks the bottom, it's going to break the top. Okay. So, and this one is not nearly anywhere against resistance. Skip Turkey. Taiwan hasn't moved a whole lot, but it is up against resistance, grinding higher. Brazil. Remember, this had to correct. Where's the arrow? 1, 2, 3 down. Okay. Went down. We put this here yesterday that, hey, look, it didn't break, it didn't have enough sellers to touch the bottom. So what happened? It reversed, went right back up, and now it's up against resistance. You can argue it's breaking out, whatever, but again, it's up against resistance, right? And that's the message of the market, that we are up against resistance. Doesn't mean it can't go higher. Of course it can. Saudi popped a little bit. Oil still below $40. Okay. And this has been the coolest cat of them all. Oil's like, election, no election. There's no demand. Go up a little bit. Drinking an espresso with nice glasses. Okay, Bitcoin. This is what I was talking about yesterday to subscribers. Wonderful. How beautiful is that? Everybody was like, "Oh, it's a double top." No, forget it. It's a big deal that PayPal, started to accept Bitcoins, um, and especially with all the fuckery that's going on in the markets and all this money printing and whatever. Like it or not, Bitcoin is here to stay, right? And of course, it's going to take off. So now we are at 15,000. 15,000 when I was telling people to buy it below 5,500, right? And who's going to sit here and say every single time that there was a sharp pullback that they were wrong? Huh? None of them. None of them. None of those people are going to say they were wrong, right? Again, we identified there was a structure above a structure. It gave us a little bit of a heart attack when it started to, when it did this, right? And it looked like it was going to start to break down. And then it held, thank God. And then boom, flag, boom, rising flag, boom, incredibly bullish, right? Breaking the previous high without a problem, right? Wonderful. So now what? Remember these points I put on here a while back, right? New all-time highs is very possible at this point. I would even say likely. All right. 1, 2, 3 down. Pause. Breaking out. Here we go. Here we go. Right. But again, up against resistance. So let's not forget that. So to take a little bit of profit here is not necessarily a bad thing. Okay. I want to take 25% off here. That would be good. Ethereum, I'm not worried about this too much, right? It's a little house, structure above it, could push higher. You know, these Litecoins and Ripples and so forth, they're not the same thing. They're not the same thing. Um, so, doesn't mean they don't have their moment in the sun, but mm, gold, I love you. I love my gold. Breakout, right? We had this here for a while, and I'll be honest, it made me nervous. It made me nervous to start breaking this down here, right? Started breaking this. I was like, oh shit, it's back into structure. I'm like building that pressure. I'm like, I'll give it a little benefit of the doubt. Boom, off it goes. And again, I'll say it that this was probably the best way to play the elections, right? Because you got a fear component to it. You have a monetary devaluation component to it. Okay, so boom, straight up breaking out from this structure. And now we are off to the races. And again, the actual the actual structure was as such. Okay, which is 1, 2, 3. It had broken out a while back, and we did have a structure above a structure right in here. Okay, but we said, all right, let's give it an opportunity to expand, see if that works. All right, and that's why we did that. See if this can come all the way to the bottom. It didn't. So this is again one of those subtleties that is telling you things are getting better, right? Came up against the resistance right in here. Built that pressure right at this area, and then boom, today, right? It's beautiful, beautiful. Right? And that's the way you read charts. That's the way you do it. It's not about crossing a line and all that stupid shit. Skip this. Aggregate bonds broken out. Boom. Right? Look at that. How long has that been showing us bullish? Right? How long? Getting tighter. Broke the structure right in here and boom. Now we're off to the races. Why? Because the structure was pointing down, so the next move will be up. Okay? And this is, by the way, a fear indicator, mind you. Real estate, still within the structure, not a resistance. Um, Commodities, not a resistance. Palladium right back in. Right back in. Structure below structure, back into structure. All right. We have a hook, so now we expand the structure. So this is what it looks like now. Okay. 1, 2, and now we're going to form a 3. All right. The 3 is not there yet, so you got to wait. You got to wait for it. All right. Copper pushing okay. Base metals higher. Agriculture higher. Precious metals right back to that neckline here. It will be interesting to see this one break out because this is all the precious metals. All right, so this is the structure, which is kind of funky to be honest with you, but all right. And let's put the upside arrow. So tomorrow when we look at it, we make sure that we have marked it. Commodities pushing higher. Again, this is bullish looking now, right? Duh, yes. So then you get the 1, 2, 3 up. 1, 2, 3 up. All right. So commodities are back in play. So what is it telling? What is the message of the market now? Well, it's telling us that uh, money printing, more QE. Remember, the Fed is talking today, and they're going to come out and tell us it's zero interest rates, and they have plenty of ammo and tools to deal, and they will do whatever it takes. Okay, so same old bullshit, useless. Sugarcane. This is the only one that needs some kind of a correction at some point. All right. Same thing with corn. Tight, 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 tight. It broke and then popped right back into structure. Wheat up against resistance. All right. Steel up against resistance. Soybeans breaking out. Wow. Well, and that again, it's more of an indication that a Biden win, right? Because the Biden is not going to be like Trump and act like a child. They might actually negotiate something. Might. You never know. Gas, let's skip that. All right, let's talk about the dollar. Dollar straight down, breaking structure, not looking good for the dollar, right? It broke, it's bouncing. Um, we said yesterday this was a wedge, and now what it looks like is this straight down shot. One, two, three, pause, and then further downside. That's what it looks like now. It can change, believe me. By this afternoon, Fed said something, whatever it changes. But that's what it is. And it is a structure below a structure. So don't forget that. Right? It's a lot of pressure building below the support area. A lot of pressure. So that's indicating dollar weakness. Okay. Let's take a look at currencies. Wow. Wow, US dollar just tanked against the Japanese yen. So when was the last time we were this low? We'll skip this one because this is a fuckery move. October 2016. Not good. Euro, boom, straight back up. Okay. We don't know if that's going to hold. Pound, straight up. Turkish lira, US dollar, ruble. Right. Clearly didn't make it to the top here, right? And it broke again. So USD cat, boom. Fuck. Straight down. All right. So where's USD CAD? Potential bounce at 129. Make it 130. All right. So you would get something like this. Come down and then you would bounce. Or bounce like this or something. Okay. So now let's clean this up a little bit. Clearly it's below the support area. Just to kind of widen out a little bit. Right. So you see it in here. Below it. You have the double tops. One here. One here. M pattern. Yes. Yeah. Building pressure. Yep. Next move down. The likely area if this breaks about 121. Okay, so let's mark that. All right, so 121. So let's get rid of these two. We don't need them. We'll just put one here at the top. All right, double top. So we're looking for this to break. If this breaks, it's, gonna get ugly. Australian dollar, bullish formation. Okay, boom, breaking out. And not only breaking out this funky looking pattern, which we can now define much better. We don't trade these things, so we don't. I haven't traded forex. I don't know, maybe 3 years. I mean, I do a little bit, but it 3 years ago, it was the best. Dollar was going up. You could just like it was like shooting fish in a barrel. Um, you just short everything dollar and you win. That's it. Now with this very funky kind of dollar movement, it's been best not to deal with it. So it's breaking this trend line again, and this is a big deal, right? Because this can really lead to the to a big move to the upside. So I'm this is going to be that's going to be on my radar in terms of buying for the longer term, um, provided it continues to move higher. Okay. New Zealand, same thing, right? Breaking out, breaking out. We gave it the benefit of the doubt. There it is, and that's coming into a big structure. So this can really, really go. Both of them actually. You could see them go all the way to the top. You think I'm crazy? We'll see. We'll see. If the dollar starts to break down, I won't be that crazy. And the dollar against the yuan is falling again. So how much are we down now? Great, great deal. Great China deal. Yes, we're doing fantastic. 8%. So where's the next likely area? Somewhere down here. All right. And again, you got to wonder what the Chinese are thinking, right? That they want to make a play for the new world reserve currency or what? And that will be an 11% move from top to bottom. And again, you see the top M pattern, right? See it? Topping out, breaking back below the previous high. Reverse. Okay, so let's continue here. The Euro index, which I haven't looked at for a while, and I said, look, here's the arrow we had in there, right? Where's price? Right up against that resistance. So do you think the dollar is going to go uh, up? It doesn't look like it. So 1, 2, 3 with a bias to the upside in the euro. All right, at least to the resistance area, which is about 125, and you're at 118, so 200 plus pips, I think, is in the bag. 10-year broke the top, broke the bottom, trying to figure out what to do, but again, the bias here is to the downside. Okay, let's see if that works. Let's see if that works. 30 years popping, aggregate bonds breaking out, right? Remember we were talking about this yesterday. We were talking about it, right? 2 days ago. What was it? Yeah, yesterday. That this needed to correct. It didn't make sense for it to keep coming down. That was bad. So 1, 2, 3, boom, breakout. We had this in place. Everything is working like clockwork. Okay. So that means what? Lower interest rates. Lower interest rates, bullish for stock market. Shy. And the same thing with investment grade bonds, right? Boom, breakout. Arrow was here already. Junk bonds breaking out of this. And remember, junk bonds are being purchased by the Fed. So, manipulation. And tips versus TLT. Okay. Treasury inflation protection tip versus the 20-year. When the tip is falling, okay, when the tip is falling, that shows deflation. And when it's rising, it's showing inflation. So This is the structure now. Let's count it. 1, 2, 3. Right? Hook, everything valid. What do you think the next move is going to be? Of course, to the downside. Okay. Magic. Magic. All right. TLT breaking out, so we expect this one to go higher. It's flagging out. All right. So the next move is going to be what? To the upside, of course. Where's the compass? Here. It was a 1, 2, 3 up. Pause. And we expect it to go to the upside. Now, if it starts to break down, different story. Different story. Okay. If this breaks here, which is multiple support areas, right, then you're looking at this. But I don't think that's going to happen. And this is the 20-year Treasury bond, okay? If this happens, I don't know. I think that would be very bad because interest rates will go up, right? So the the price of a bond goes down, interest rates go up, and that puts pressure on earnings yield of stocks, and then the stocks fall. So that's the beauty of QE. That's the beauty that you know that you're going to be protected by the Fed, that they'll come in and buy it. All right. 10 years tips. Okay. TBT. Forget that. European banks, right back down. An emerging currency fund going sideways. Again, this we look for the upside now, right? Yes, this is a 3, right? This is a 1, 2, 3. Finished. Now it's popping, building pressure, and the next move is up. What does that tell us about the dollar? Dollar down. Okay, that's the message of the market. Dollar down. XOP, XLF popped. Banks popped. Biotech pausing. And this is what it's looking like for biotech. That it's kind of building that pressure right at the top here. I hate when it does this. Oh, come on. Right? It's building that pressure here at the top here. So the next move is going to be higher. And I wonder if that's going to come when there's some kind of policy change or whatever. Water going straight up. Hotels, nothing. Hotels were outperforming airlines. I think that will continue. All right, let's go to the Facebooks of the world. Straight up shot 2.2%. I think it was up 8% yesterday. Amazon, boom, straight out of it. Okay, and that's the problem with this now because when you get that relief rally from this, right? Get that relief rally, then you get the push down. All right, this is not based on fundamentals. A lot of these moves. Apple, boom, straight up. Okay, so you had a tight, 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 incredibly bearish, back into structure, boom, straight up. Okay, so now, again, it has that potential of reversing because you're so close to this area. And you've built enough pressure in here where you can finally get that move to the downside. Okay, alternatively, you go back to all-time highs, and you have a $1.6 trillion company, and then a $2 trillion, and then a $3 trillion. It gets out of control. All right, Netflix bouncing here. So you had a moonshot up, straight back down, back up again. Right, garbage, garbage. It's in the middle of nowhere. Right, might want to close this gap here to 523. Fangs, Google, sorry, up against the resistance areas of the megaphone. All right. Nvidia straight up. Tesla, back up. This is going for a head test now, right? The head test is here, right there. So this is possible. And the rest we'll just kind of leave for now. Let's go back to the shorter term. So a lot of indexes up against resistance areas. That's for sure. Definitely we have dollar weakness. And um, we're up against resistance in the Nasdaq, which is the market leader. And that's what 2.2%. And then S&P at 2% up against resistance. So this is a great risk reward short. Clearly, right? I don't think you have to be a rocket scientist to figure this one out. If it breaks out, you cannot allow it to get away from you. Okay? If it breaks out, even if it crosses the line a little bit, you got to stop. Okay? I don't know what your risk tolerance is, how much you're putting on, what's the size of your portfolio, are you using leverage, how much leverage, blah blah. These things I don't know, uh, don't want to tell anybody, but just looking at price, that's the only thing. And what is the risk reward? Let's go down to a 1 minute. All right. So high basing, right? It's high basing here. All right. So do you want to take that short? No. You gotta wait. Gotta wait somehow, right? Let it start to roll over. Is it gonna roll over by price or is it gonna roll over through time? Don't know. And that's the problem with trading in these kinds of environments. Um, that one piece of information comes out, somebody lost a state or won a state or whatever, everything goes to shit. And then you go straight back down. Or you go straight back up. And you maintain yourself in a particle market. And this is a particle market. I don't think anybody can argue that, right? You don't have to be a wizard to figure out that this is just going straight up, right? This is particle. This is waves, right? There's a difference, right? We can now do this, right? Let's make it like this, right? Zoom out a little bit. What is it? Particle. We had another particle move here. But look how much easier it was to short up here because you had a nice confirmation of a head and shoulders, and then everything started to fall apart from there, right? Waves, right? And then you get a piece of news, particle straight up against resistance. So, all right. So let's go to a daily. Point of control, 11,792. All right. S&P, point of control, 3467. And again, make sure it's a daily. All right. Again, does that look like a formation you want to short? Not really, right? You got to wait a little bit. Maybe into the afternoon, there will be a nice little structure. It's nice when you know what you want to do. And then you go to a 1 minute chart and you're like, okay, do I have something there? Is there something that I want to short? Is there even on a 1 minute? And if the answer is no, just wait, right? Just wait. You're in a particle market. Duh. Yes. Look at that. Breaking out, right? Even the previous high is breaking out. And we talked about how there was a void up here that it didn't touch. Where is it? Right here. Okay. So is this one going to touch the top? Maybe. Maybe. We shall see. All right. All right. So what I want to do now is I want to measure what is the point of control from the top. Okay. From when this topped out, where is the point of control? This is the top. There we go. So the point of control is at 11,431 since this all began. Okay. And the volume is falling off. Okay. So falling off. All right. That's the top there. 3,400. And you can see the S&P is sneaking out. Huh? It's trying to peek its little head out. It's above the trend line. Okay. All right. So we see the erection. Yeah. Just keeps accelerating to the upside. How long does that last? Not very. Again, volume starts to um, drop off. Okay, right in here. You got a vacuum right above here, right above where it's at, right here. There's a vacuum. So you could easily see a move to the next point, which is 35.60. Okay. So yes, it's a very nice place to short. Just wait. Wait for that structure. So in a 1 minute, you want to see this start to break. Okay. And right up top here, there's a void. All right, so that's not good. Subtle little signal. All right. Way above the 63-day moving average. So that's bullish. That's good. So we're at 2%, which is the maximum for the day. Let's take a look at the internals. Not 5 days. We'll do 5 days after. Always start with the first day. All right. So for today, who's leading? Materials, information technology, and financials. These two, you don't want to be leading, right? Who's lagging? Real estate, energy, healthcare. That's okay. That's okay. Consumer staples, they're lagging. That's okay. Consumer discretionary. Uh, I mean, it's not a lot, but still, it should not be number 4. How about the last 5 days? Healthcare, materials, industrials. No, bad. The laggards, utilities, energy, consumer staples is okay. Technology in the middle, really? And it's up 6%, right? Remember, um, the weekly, the upper normal extremes are about 7% for the week. Okay. We'll come back and check this later. All right. So S&P continues to be in that little channel. All right. Nasdaq.